Good evening, viewers. This is World Pulse News, and tonight we turn our lens toward a world standing at a financial crossroads. Across continents, the winds of recovery are blowing, but they carry with them the scent of uncertainty. The International Monetary Fund (IMF) has just released a new report that is shaking the halls of power from Washington to Beijing. For the first time in over 2 years, the global growth forecast has been revised upward, yet the world remains dangerously divided. According to the IMF's 2025 World Economic Outlook, the global economy is expected to expand by 3.2% this year, a modest yet meaningful improvement from the 3.0% estimate earlier this year. Markets around the world responded with cautious optimism. Stock indices ticked higher, bond yields eased slightly, and commodity prices stabilized. But the IMF's message is clear: the recovery is real, but it's fragile. Behind the optimism lies a network of deep challenges. Trade tensions are once again intensifying, inflation remains stubborn in key economies, and debt levels in developing nations are climbing to record highs. In short, the global economy is walking a tightrope. One wrong move could send it tumbling. The United States remains a central force in shaping global dynamics. President Trump's renewed trade policies, which include expanded tariffs on Chinese imports, have created fresh waves of uncertainty. The White House defends the policy as a strategy for economic independence, while critics argue it risks igniting another trade war. China, refusing to back down, has responded with export restrictions on rare earth minerals critical to electronics and defense production. This tit-for-tat escalation has drawn concern from economists, who warn it could shave 1.2 percentage points off global growth by next year if unresolved. In Europe, the outlook is mixed. The Eurozone economy has shown mild improvement, buoyed by strong performance in France and Germany. But inflation, still hovering near 3%, continues to challenge policymakers. The European Central Bank faces a difficult choice: tighten further and risk slowing growth, or ease up and risk reigniting inflation. In the United Kingdom, post-Brexit headwinds persist. Labor shortages and declining investment have weighed on productivity, keeping growth below the EU average. In Asia, however, there's energy and expansion. India continues to be a bright spot, expected to grow 6.5% thanks to booming tech, digital services, and manufacturing. China, while facing export challenges, still projects 4.8% growth, enough to keep it the world's second-largest economy. Indonesia, Vietnam, and Malaysia are also experiencing steady expansion, benefiting from shifting global supply chains. Meanwhile, Japan is quietly reinventing itself. After decades of deflation, the Bank of Japan's gradual policy normalization has sparked new optimism. Exports are recovering, consumer demand is rising, and the yen is stabilizing. Yet, long-term challenges, such as an aging population and limited immigration, still loom large. In Africa, resilience meets reality. The continent's economic potential is immense, but the weight of debt and the impact of climate change continue to hold it back. Countries like Kenya, South Africa, and Nigeria face a delicate balancing act between development and fiscal responsibility. The IMF urged wealthier nations to support debt relief initiatives and provide climate financing to protect vulnerable economies. Across the Middle East, energy remains the lifeline. With oil prices steady around $82 per barrel, producers like Saudi Arabia and the UAE are benefiting from robust revenues. However, regional instability and shifting global energy policies cast uncertainty on long-term sustainability. As the world transitions toward renewable energy, these nations are racing to diversify their economies. The IMF's AI Preparedness Index, unveiled alongside the growth forecast, brought a new dimension to the discussion. It measures how ready each country is to harness the power of artificial intelligence. The US, Singapore, and South Korea lead the pack, while many developing nations lag far behind. IMF Managing Director Kristalina Georgieva warned that the AI revolution could supercharge inequality unless global cooperation ensures fair access to technology. Financial markets have responded with a mixture of relief and restraint. The Dow Jones and Nasdaq closed higher following the IMF report, while European markets were cautiously optimistic. Asian exchanges, particularly in Tokyo and Mumbai, surged amid growing confidence in regional recovery. Yet, government bond yields remain elevated, signaling persistent inflation fears among investors. The IMF identified three main drivers behind the stronger forecast. 1. Improved consumer confidence in North America and Europe. 2. Stabilized energy prices. 3. Better than expected corporate earnings. But risks still dominate the horizon. The ongoing wars in Ukraine and Gaza, rising protectionism, and political polarization in the US all threaten to derail progress. The IMF's message is unambiguous: the next global shock could come not from economics but from politics. Environmental pressures also weigh heavily on the outlook. Climate disasters are now a central variable in economic forecasting. The IMF estimated that extreme weather events could cut global GDP by up to 0.5% annually over the next decade. It called for immediate investment in green technology, sustainable energy, and carbon-neutral development. Critics of the IMF remain skeptical. Some accuse the fund of painting an overly rosy picture to calm markets. Others point out that the IMF's optimism depends on factors that are far from guaranteed, such as stable geopolitics and declining inflation. But the institution maintains that resilience is growing, not evenly, but visibly. For ordinary citizens, the recovery still feels distant. Inflation has eaten into wages, housing costs are rising, and food prices remain high. In many developing countries, public debt leaves little room for social spending or infrastructure growth. That gap, between global statistics and local realities, remains the defining story of our time. As the world edges forward, the IMF urges unity over division. In its final statement, it called for a renewed commitment to cooperation in an age of fragmentation. The fund warned that unilateralism, each country acting alone, will not solve a global problem. Instead, shared growth, digital inclusion, and climate solidarity must become the pillars of recovery. And that brings us to the closing question: is this recovery sustainable, or simply temporary? The next year will reveal whether the world has learned from past crises or is simply repeating them with new tools and technologies. For now, optimism lives, but so does caution. From trade wars to AI transformation, humanity stands at the edge of a new economic era. You're watching World Pulse News, bringing clarity to a complex world. Stay informed, stay aware, and subscribe for daily updates on the forces shaping our global future. Because tomorrow's world starts with today's understanding. Thank you for watching, and good night from World Pulse News.